Welcome back. Journal Entries Part 2. Accounting 201. My name is Judith Paquette. In Part 1 we booked 5 journal entries. In Part 2 we will book the remaining 8 journal entries. Then we'll post them to T accounts and create a trial balance. On January 5th, Emerald City Graphic Designers takes out a $5,000 note payable in cash. Interest will be 12%, and whenever you see interest, it's always annual. That's kind of a high interest rate, but we put that in just to make it interesting. Now, cash goes up and notes payable increases as well. So we put cash into the company and we increased a liability. So we debit cash and credit notes payable. Transaction 7. Emerald City Designer pays Dakota Art Stores for $800 of the money owed. Now remember, in an earlier transaction, number 5, we took delivery of $1,550 worth of supplies and we increased accounts payable. Now we're going to pay down that money, $800 of it. So we are going to reduce cash, and that will be for a credit. And we're going to reduce accounts payable, and we do that with a debit. Transaction 8. Emerald City Graphic Designers creates an ad which runs in the newspaper. They are paid $1,300 in cash. Cash is involved, cash increases, and we increase cash with a debit. It's service revenue. Service revenue increases, so cash is up, debit $1,300, service revenue increases, $1,300 credit. Okay. Transaction 9. Emerald City Designers accepts an advance for $900 for design work to be done for Joe's Organic Groceries by the next month or sooner. So when we say accept an advance, that means cash is involved. Cash went up $900. That would be a debit to cash. And because it's a prepayment by a customer, we cannot call it revenue until we perform the service. So we're going to book it to an account called unearned revenue. Now that looks like a revenue account, but it is not. It is a liability. Emerald City Graphic Designers owes Joe's Organic Grocery the advertising service. When they provide it, then we can talk about when it will be revenue. Transaction 10. Emerald City Graphic Designers creates and delivers advertising posters to Genki Sushi. The fee, $4,700, is billed but not paid. So normally if we booked a sale, we'd increase cash, but when we bill a customer, we increase accounts receivable. Increase accounts receivable, it's an asset with a debit. We increase service revenue, we get credit for the service revenue, we get credit for the sale, even though we haven't been paid. That's how we do it in accounting. Transaction 11. Emerald City Graphic Designers pays its administrative assistant $3,600 for his 4-week salary. This is 4 weeks. January 29th is a Wednesday. So as the 30th and the 31st will be paid in 4 weeks later in February. So we're going to say, just for the sake of an example, that we pay the employee in cash. So cash goes down, that's a credit, and we're going to charge it to salary expense. You know that because I told you up here it's salary. And when I say pay, that means cash. Transaction 12. Emerald City Graphic Designers receives but does not pay the telephone bill of $250. The bill is for service provided in January. So we've received telephone service. We have not paid for it yet. Or we've used the telephone. We haven't paid for it yet. So that's a liability. Accounts payable, $250. And the charge is to telephone expense. We want to recognize the expense. Last transaction, Emerald City graphic designers declared and paid a $600 dividend. And you should start seeing the vocabulary that we associate with when cash is involved. We paid this, we received in advance, all of those sorts of things. And that's just practice. You guys will just have to practice it as you work problems. So when we pay a dividend, we know cash is involved. Cash went down, so that will be a credit. Dividends is charged $600, cash is reduced $600. All right, so we've just done 13 transactions, and I would encourage you to review them and put the video on pause and try to guess at the answer or figure out the answer and then get the answer. But really be familiar with these transactions. So the next step in the accounting cycle is to post your entries. And I like to note the transaction number alongside. So, and then at the end of that, we'll calculate the ending balance and put it on the correct side, the debit or credit side. So I'm going to show you all the T accounts associated with these. This first slide is most of the T accounts through salaries payable. The second slide is the remaining stockholders' equity accounts, revenues, and our two expense accounts with this company. But let's go back and look at cash. So that first transaction, we debited cash, so we put it on the left side, and we credited common stock. So I'm going to change the slide, and you can see credit to common stock. And I would encourage you to make a sheet, list all these accounts, go back to the journal entries and post them yourselves just to make sure that you're familiar with this process. Second journal entry, we spent some money on rent, we credited cash, we debited prepaid rent. Third transaction, we purchased equipment, we put $200 down on that equipment, transaction 3, and we agreed to pay later the remaining $3,600, and so forth. I'm not going to work through every transaction. Now please note that transaction 4 was a no entry, and just to keep the number sequence accurate, I didn't assign that 4 to the next entry. I just used it up on the no entry. So we go from transaction 3 straight to transaction 5, where we purchase supplies on credit, debit supplies, credit accounts payable. And here's the rest of the transactions. You can see that retained earnings is empty. That is because this is the first month of business for Emerald City Design, so there's no activity. There will be in future months, but not this first month. All right, now we take all those ending balances and we move them over to the trial balance. Please note that an account has either a debit or a credit balance, not both. An account can have activity and transactions on either side, debits and credits. But when we come up with our ending balances, we only put them on one side. Now let me back up on that. See how the cash has debits and credits. Add up the debits, add up the credits, whichever one is bigger, that's where your balance goes. Now if you have a T account with just one transaction in it, you don't need to draw a line and put that number down here as a new total. You can just list that as your total right there. But see how accounts payable is bigger on the credit side. The debit side is smaller, so you put the ending balance on the credit side. All right, so here's our trial balance. We lifted those T account balances and we post them either on the debit side or the credit side depending on where the ending balance was. So again, cash had a debit balance of $70,800. Notes payable and accounts payable have credit ending balances. So we want to put those on the proper side, and note that the totals have to be in balance as well. All right. One more thing before we stop. Look at the order of the T account. Asset, 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 contra asset, liability, 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 salaries payable, liability, Common stock is stockholders' equity. Retained earnings is stockholders' equity. Dividends is part of stockholders' equity. One revenue account right now, and the rest are all the expense accounts. This concludes part 2 of the journal entry video. Your next video is adjustments.